Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning. Welcome to the morning brief. Today is Wednesday, February 22nd. What do we have on the docket for news today? As you can see, there are two red items. 2 p.m. Eastern Time, FOMC meeting minutes. So probably nothing new other than probably maybe see some idea of what the Fed governors are thinking towards the last meeting as well as future meetings. So this is all kind of speculation to what is going to happen in the future, because these are meetings from a prior meeting that were just now being made public. That being said, 2:10, we have some New Zealand, Royal Bank of New Zealand Governor Orr speaking at 2:10, so that will affect the New Zealand currencies and currency pairs, etc. That being said, we also have an FOMC member, Williams, speaking at 5:30 at aftermarket close. Low impact due to the time of day as well. So that's what's going on today. Remember, the reason why we go over all of this stuff is to make sure that every day you establish a routine to look at the same things so you don't miss anything. It's so easy to miss a news event or something if you're not going through and doing this every day. Looking at the daily chart here, ugly day yesterday. I was surprised they were able to break that low right there, which was 4,525. They did break that and close below it. Ugly day. Certainly leading me to believe that we can see lower. We are getting down into this next band of consolidation, and actually that band of consolidation extends much further back. So this is a much bigger consolidation band than we had prior. We are into that now, so this band will be support, especially the bottom side, which is about 39.58. Where could it go based on the size of the bar? If you just doubled that, it would probably be able to go down to 39.43, that low volume node right there, 43.75. Would not be out of the question if it gets really, really ugly. We might even see a test of this low from back in January, which would be around 38.99. I think that's really an outlier, but it's still a possibility. Now, part of what we're doing here is we're trying to be an umpire and be completely neutral. We're just calling balls and strikes, whether it goes in either direction. If we get a good bounce today, I don't know that it's going to have the energy it needs to get back to the high of yesterday. There's a low volume node in front of that at 40.73. I really think there's a lot of overhead resistance. Maybe it could get above that. We get to 40.95. Sort of, I don't know. That just doesn't seem very likely to me. I would say top side is probably going to be limited to 40.50 area. That would just be a guess based on previous levels of resistance. So that being said, we'll move on to the inventory. So what does inventory tell us? Well, inventory is interesting. We do have some divergence today, pretty significant. Big sell-off yesterday. But look, from 10 a.m. in the morning all the way into the close at 4 o'clock, we had on balance, this is on balance, net buying. Inventory actually went up by 4,800 contracts. So what is this? This is totally this is buy the dip. This is buy the dip. That's exactly what that is. Now, It's very important that we pay attention when we have divergence like this. Price is going down, inventory is going up. This looks like a buy the dip scenario. However, the buy the dip folks are very weak hands. And so if we continue to go down, say we break the overnight low below 4,000, these people are going to bail out pretty darn quick. These are weak hands in my opinion, and if it doesn't work out, they will bail out. So 4,000 is really the number, the line in the sand, even though the overnight low is slightly below that at 39.95. Below 39.95, all these people who bought yesterday, they're going to bail. They're going to bail, and we can see an ugly sell-off. So this is an interesting chart, but this does not surprise me. This is screaming by the dip people, buying all the way down throughout the day. That being said, is what it is, right? So taking a look at the intra-day chart, since overnight high, 40.21. Any resistance to the top side? Definitely some confluence around 30.39. We've got some more confluence around that 40.50 area, 40.54. Downside support. Downside support, there's support right around the overnight low at 92.50 to 94-ish. Below that, 39.73. See if we can go a little bit below that, 39.60. Those are the intraday numbers that I'm looking at as support and resistance for this morning or today. The Stock Traders Almanac is negative 38.1. 38.1% chance the market will be up, which is a 61.9% chance the market will go down today. So historically negative for today, February 22nd. Again, when the market gets crazy like this, it's important to stick to your stops and maybe even wait and only take setups that are your best setups, and you can even knock your size down. Anytime risk goes up, I lower my size and I get more selective on the trades I want to take. That being said, I hope you have a great day. Happy trading, and I'll see you guys tomorrow.